Hey, greetings, traders. It's Samantha LeDuc, founder of LeDucTrading.com. Thank you very much for joining me today. It's Tuesday, and we're doing Macro to Micro Power Hour with my good friend Jonathan Gibbons of VigTech.io. This is a Tuesday, Thursday gig. I do the Tuesday with Jonathan so we can dig into market structure, especially around volatility and options, especially thematic right now with meme stocks. And then on Thursday, I do a deep dive into a macro topic. This particular Thursday, it's going to be, I'm very excited about this, with Logan. I've had him on before, real estate data analyst that is phenomenal. And we have talked back in January about the perfect storm of housing market, and now we're going to revisit that this Thursday for a catch up, given the incredible amount of price appreciation in housing. So look forward to that. A little housekeeping before I bring Jonathan in. We talk shop. This is going to be housed after, not only in a podcast version, which is on Apple and Spotify, Audible, all your usual suspects. Just look for it by my name, Samantha LeDuc, LeDuc Trading, my guest speaker. And also the YouTube channel I will post right down here on Macro to Micro Power Hour. We talked crypto carnage last week before Scott Melker of Wolf of All Streets. I've had some interesting conversations even on trader psychology. We had last weekend Diane Scholl. Those who don't know her should. She's really the trading psychologist to the stars, and she had some just nuggets. Let's see, we also have, after this is done, and hopefully you can hear me. Yeah, it'll be posted here as well. Jonathan is my partner in crime also in my risk indicators, and they are housed on his platform. If you want to take a look, they're across multiple time frames, chase, swing, and trend. So without further ado, let me introduce to you Jonathan Gibbons of VigTech.io. Hey there.
How's it going?
I'm good. I was talking into the screen the whole time.
Nah.
Could you hear me at least?
Yeah, I could
All
hear you.
right,
We couldn't
good.
we couldn't see you, but now we can see you.
Oh, it's still it's too early in the week to curl my hair. So
We're all coming back from a long weekend, yeah, so
long weekend of landscaping house projects. So happy summer.
yeah, exactly. I mean, I've got my workout shirt on because it's hot, Florida.
Shut up. We had rain all 3 days. Didn't stop me. I still got my hands dirty in the garden and all that, but still, it's just waiting for the Florida weather.
Yeah, well, you're probably gonna get the good weather, and we'll get the suffocating humidity.
That.
Um,
Well, you could escape to the where are you going, Virginia or something?
Virginia, yeah, we're headed up northeast in the summer for a little bit, but we'll be yeah, it's a little bit nicer than Florida. Try to get out of Florida in June if you can. You know,
Smart man, smarter wife, right?
yeah, that's right. That's right. Right. I can take no credit for that.
All right. So this is, the topic du jour here. These meme stocks have made a mean revival. And I just want to get your thoughts on this because the options matrix product in VigTech.io can spot a lot of this stuff early and obviously the intensity. So I was hoping very much that we could talk about that because, I can do technical analysis on these, but not fundamental. There's just not a lot of respect I can give them fundamentally. But
Mhm.
but options right now has been hot fire flames. And AMC last week, one day on Thursday, had more options than Tesla,
Mhm.
and actually commanded last week 10% of the options market. So
Yeah.
overall, indices included.
Yeah.
So talk to us. What the heck is going on? Why aren't they trading at reasonable? Um, just is retail really controlling this in your opinion?
Yes and no, right? Like, yes, in the standpoint of the volume, sheer volume of people trading, and buying options, right? So, we've talked about this ad nauseum for 6 to 9 months, something like that, where there's been so much options trading going on because of the ability of the apps, the free trading apps, to support the actual trade of options itself, and make that easy and quick to execute, and very trigger trade type stuff, right? When you look at when you look at that stuff, and the impact, it's like a second derivative impact. So the first derivative is the ability to trade a lot of options freely, right? I don't have to pay for commissions on that. So, I trace it back to even further. So like maybe when I was trading using like TD, like 2010, right? Thinkorswim, Options House, then E-Trade bought Options House. Any of these types of products that were options product, you're paying like $5, $10 a contract for your initial contract, and anywhere from 50 cents to 99 cents per contract, right? So, I mean, if you were going to trade 100 lot GameStop on a Friday expiration, right? So today, and then it's going to expire Friday, that was a very expensive trade 10 years ago, even 6 years ago, 4 years ago. It was an expensive trade. I think about the mechanisms of now, right? So now that's free, right? So I might have $50 and I can YOLO those on Friday, and I wouldn't even been able to place that trade 5 to 10 years ago with the amount of cash that I had in the account. I wasn't be able to execute the trade. Now multiply that times like, there was Robinhood had no users in 2010 because it didn't exist. Now they have 22 million to 25 million users, somewhere in there. We don't know the exact statistics. Then they forced everybody to go to free options, right? And not everybody's gone all the way free, but pretty close. So that's Schwab. Schwab notated that they have, right, the largest growth of user accounts, trading accounts ever in the first quarter of this year. They noted that. And this is after it went to free, or close to it, whatever their proximity to free is for trading. And you just think about it from a numbers game, all those options that are getting traded where, they weren't, these contracts weren't trading like this 5 years ago. And you can see some change comes along the years of 2017 to 2018, where that options trading just starts to explode and really takes off. And plus all the new accounts created, right? So that's just like a recipe for law of large numbers type thing. And I think that's spillage. And so now that's spilling over into the markets in general. That's why we want to create the matrix and really, target a lot of what we're doing around options going forward. Because the thing's more than just a derivative at this point. I think it's a driver, not just an offshoot. Because you think about how many people are trading options in magnitude, right, in great size, that then you have the natural gamma effects, not gamification, but the gamma, right, where the dealer sells the option, and that's Robinhood's number one source of revenue is options trading aggregation. So the aggregations of options orders that are getting sold into the pools. So I think that like when you add those two things together, I think it's that simple. That this many new people are trading from not just like an interest level, but sheer demographics. Young people are coming out of college, they're starting to get involved in investing, and they're like everybody's from the waiter to the neighbor to the car guy to people that are at the hospital to everybody in between in the world is becoming more familiar and interested in the markets, which is great. But they're all also kind of you got this free trading apps which are causing the massive influx of people into the market with free options trading. And options trading gives you way more leverage. So I can trade that $50 and turn it into a $5,000 gain, which is insanity in a historical perspective. But it's actually kind of the gambit of the day. And if you think about the gambit of the day, I go back to that cheesing term. I've said many times that it's a video game type term where if you find a weakness in the artificial intelligence, you just exploit it over and over and over again. Well, the options environment has created a little bit of a weakness per se, in the sense that you can game these stocks, right? And so the natural effect of AMC actually looked pretty good. About a month ago, 6 weeks ago to 4 weeks ago, I thought it looked pretty good from a flows standpoint. So it was sitting there. It could definitely get running. And so then you get the massive options contract activity going into it, right? And it just is like massive. Well, it starts cooking, and you get everybody involved, and it becomes a meme. On top of the fact it's a heavily traded option, it's a meme. And Twitter has not acknowledged that memes really run their algorithm. Like they love the meme because of the share functionality of it, and many do the other platforms. TikTok is very much a meme or entertainment driven thing as is Instagram. So like, if a story or a theme gets running with a meme, then you add that to the options themselves, which have the gamma effect. So dealer sells a call. Sure, I'll sell you all the calls you want. I got to buy the underlying. Here we go with one of those squeezes. And then it just starts getting out of hand in the short duration expiration. So, they run them and gun them. So I think that, this is like a market dynamic more than it is something that's like, to me odd or like not even like, oh, it's going to go away or anything like that. I don't think so. I think that it's very much like a commonality now that like you'll see these fits and spurts in these stocks that get into that kind of options. I call it a vacuum almost. It's like an options vacuum. And as long as options trading is free and you got a $200 account, why are you not trading options, right? If this is your throwaway YOLO account, right? Because you're not investing. That's not investing. That's a different thing. Like investing maybe, a basket of this and it's going to grow and I'm going to hedge it, what have you. This is like
your whole gamification theory playing out with a whole bunch of sharks. And the faster they feed, the more sharks it attracts. And once they start swimming, they drop like a rock, right? I mean, sharks have to keep moving, otherwise they fall to the bottom.
150%. So what we did is we took the app and we pooled the entire options market, not just like some of it or not aggregations, but like the entire traded market, right, for the day, every individual trade, right? And you can begin when you average it, kind of when you look at that, and you're to look at it as a deviations and rate of change and things like that in real time, which is like massive computing type stuff. Then you can kind of pick up on what's odd, what seems odd. So it's like today, Newmont Mining, right? For example, Newmont had massive options activity. Home Depot, right? You got to dig through that to start to see if that was like buy side, sell side. Is that was it a lot of it like heavily chased? Was a lot of it sold to you? All those kinds of things are in the app, but you're looking at this just you're chasing the size around. So it's like watching a massive aggregate human population move, right? And if you don't, I think if you're not doing this now, with the way today's market works, if you're not looking at this stuff now, I don't know, you're literally like flying kind of one eye blind, because you don't know. You can look at it historically, right, from a perspective of maybe technical analysis, but if you don't have and that options are no longer a derivative but a driver, how are you not, right, like following this? And also the memes, like you're literally, if you're not following the meme themes, right, on a regular basis, right, where you could say, okay, these people don't matter, they're not relevant, right? Like they're small fish, the retail small fish. Well, the retail isn't small fish when 22 to 25 million people have an account that's trading a derivative instrument that's causing a greater impact than the securities themselves. I think what we're seeing is watching the passive environment become dwarfed by the active environment because of the derivative impact. Now that's total conjecture for my part, right? I have no study to back that. That's just the conjecture of my thoughts that like, okay, we've had the passive ETF environment, which is driven for a lot of things on one time frame purchasing, right? So they're net buyers, right? Because everybody needs to be long. You don't have like you go to your FA and your FA doesn't say, hey, I got this great short idea, right? That's not how buy and hold long-term investing work for most folks. Go long, hold on, right, and everything works out. So that's ETF basis. Now you're going into the environment of, I'm not looking for ETFs. I'm looking for active, and I got these derivatives, and I'm trading, which is impacting in a larger size. So if you got that many AMC calls, like you just mentioned when we first got on, we were kind of all over that last week. A bunch of people using the app, posting about it, and all this kind of stuff. And I was so excited for them because they all cleaned up, because they got to see it before. You could kind of see it's the same thing I've been preaching about the options activity in the precious metal space. Just because I keep seeing it, even though I've got down days and all this kind of stuff, you just see this continued massive accumulation in the option side. that is like, well, at some point that's going to tip it and run it. Now, it doesn't always have to be the case, but these things play out in a matter of law of large numbers and then probabilities. So I think that you're seeing the options market is not a derivative, but a drive. And it's taking a front seat to the markets rather than the ETFs. And the ETFs are probably in the front seat. And I think that's like, you can kind of follow it around. Like there's some folks that trend Wall Street bets. I'm not sure that that's the only place I would trend for like, what's the most mentioned meme, right? There's becoming some alternate data sets and things like that. But I think that you can kind of very visibly see that in the options market, right? And we've got all kinds of different scans that we built for those paper hands, Roaring Kitty, like track the different names that we see to be these thematic names. And you can kind of track what's unusual and what's not unusual. And unusual activity is not anything new. People have been looking at that for years. It's just that it's a little bit different now than it has been historically. And so I think also, this is another just total conjecture, take it for what's worth, is that is the more pelts, right, scalps that go on the wall in the crypto space, the more people are going to want to come to, not 100-to-1 leverage, but maybe 10-to-1 leverage, right? That's in the options market, just a little bit more organized than the crypto space. Crypto is still going to be wild and woolly, but these are painful. These are painful, like 80%, like, on leverage is what I think. What did Coinbase say? I forget. It was either Coinbase or Bitfinex, one of them. I don't know. So I don't want to be quoted, but they had a massive wipeout purging of accounts in the last couple of weeks. And, that stuff is going to drive folks to like more, I wouldn't call them normalized. I would just call them today's kind of thing is going to be the options trading, because it's just a little bit more mainstream. It's actually positive for liquidity in the market. And, it prints money for the options contracts are just much more lucrative for the market makers than securities. They just have always been more lucrative than the securities. And so that's a big part of it too. So I think that watching the watching those names for option activity, just watching any of the option activity now as a visualization of what's firing, right? Kind of gives you're in front of it. You're in front of it. You're going to be able to make some pretty solid decisions. Now, when you combine it with, the stuff that you do, like the technical components, the trend capture, the metrics, now you're weaponized, because now you know where it's flowing, right? And the levels, right? That trigger, right? Because the levels trigger too. The options contracts trigger, but the levels in the options contracts, from my experience, are almost dead in line, right? So the market levels that you see, like when you pull up your levels on a chart and you're like, hey, 122, right? Based on this and this, typically there's a lot of contracts sitting around it, because that's the same way, institutional whales and sharks are looking at that. Like that level breach, they'll put the collars around it. It takes off from there and so forth. So the levels are clear as day. I think that as long as this is continuing to go on, it's like good for business, so to speak, for the market makers. So if it's good for business, I don't know what Robinhood printed. It's not public information.
Oh, I would love. I can't wait to see, because their IPO
they're
material.
printing
They're printing money.
Yeah, I believe that they're printing money on the option side right now. From what I
Absolutely.
understand, speaking to people that I know are in the know, that they're doing very well monetizing at this point, right?
No
And
kidding. There are lots of monetization. But you're on a roll. I mean, I didn't want to even interrupt, because you have this, this theory that I agree with, obviously, but I think it's a lot more retail. It's not just this intensity of shark feeding that brings the smell of blood in the water that brings everyone else in. But you're right. I mean, technically, they even look fine, like my 10-week on a weekly time frame for a bloody trend trade. I hate to say it. BlackBerry looks great, etc. So I hate to say it, because fundamentally I still don't see AMC valued at these levels. And of course I look at 10 billion in debt, and I look at a print this morning and going over the meme stocks in my live trading room, and 1.3 million in premium for buying $59 AMC calls. Like it's 31 right now, people, with an IV in the 500s, 600s, right? And this was a June weekly. So I'm looking at this going, they either have more money than brains or they want it, it's going there, right? Like we had this meme fest with Tesla for many, many weeks. As soon as Musk said the 420, right?
Right.
Right. And we just went up and up and up and up. And you and I were talking about it every week. The call buying is unprecedented. And we're not talking even at the money or near. We're talking way out of the money in five,
OTMs.
six
Yeah.
million dollar tranches. And it was talk about big giant footprints. So yeah, it's also a cheap stock to buy relative to GME, right? I mean, AMC
Right.
is cheaper,
Right.
and there's that psychology of getting more bang for your buck.
It's like our guys, they post something on Friday, like, let's all go to AMC and watch a movie this weekend. Like it's like AMC's actually coming back because people are like going out and they're going to the movies. They got the COVID shot and people are getting out. It's like the baseball games and stuff like that this weekend. So I don't.
Hey,
It's easy to attach the meme to it, right? To the theme, it's something that not it can transcend into the social narratives, which are a big deal. Because if it's not a free trading app, the next largest thing that's been developed is the social trading apps, right?
so the
And how
social
much,
trading apps are really, this is funny. I don't follow
right?
that. That's a sentiment tell, but if you, I'm looking at one right now. AMC doing well on Google as well. This was retweeted by Eric, ETF expert at Bloomberg. AMC is Googled more than GameStop or Dogecoin in the USA. So that's a sentiment read, right? Everybody's excited, and they're not just looking for movies. It's very much the stock. But what I'm talking about is that phenomenon, at least for me anyway, and I'll show this because I think it kind of merits the point, where I retweeted this last week. AMC shares are back to 2017 highs. Okay, here's a chart. Oh, that's the wrong one. That's a chart. Okay, so we have thrown a crazy amount of money into this meme stock where now we have market value has more than doubled. I think my math is off. I think it's tripled. While junk bonds hit all-time highs this week, by the way, from 5 cents in November with a coupon of 12%. Again, remember, 10 billion out in loans. And this is where this whole thesis of, credit is supposed to leave equities. Bah humbug. It is absolutely equities are leading credit. And now we have literally the bonds have reached near par from November until June because of this equity ramp. That is what you call inflation. And the executives must be just giddy with delight, right? Because they can now make a lot up. They are literally able to do a lot with that high equity now. I just think, refinance debt, pay it off, whatever. This to me is how you actually can, I think, equate to what we would love to see, in lots of troubled companies. That all of a sudden it's like a daydream, or we're gonna fly high in equities and pay off our debt. We have no justification for actually these levels, but literally equities are now leading credit. It's insane. Very
I,
strong.
it's participation to me.
Yeah, it's a
I,
shark
th- I think
theft to me.
I think it's a participation thing. You've got a lot of participation, and you know, we have a different zeitgeist in the country right now, and that is like, how much money are you making? And I hear that a lot, right? Like, whether it's real estate or whether it's, what have you, anything like, restaurant that's back open or whatever. I've never made so much money. Never made so much money. It's like a zeitgeist of like kind of the roaring 20s. And I hate to say that, like, in that kind of
Hmm.
context, but
No,
it really,
I've heard that too as well. This parallel.
yeah.
Yeah.
So I think that's a big part of this, right? That you get a lot of like kind of bravado, in the sense of like, it's only going up. And
Yeah, but
to
there's a
to the point that it is right now, right? Like, especially with the reflexivity of some of the impact inside of this systemic stuff, where we can kind of, but see, like the social trading apps, I don't think that's the same thing as like what's happening in like the Robinhood environment with these options. Like, that's like my friends trading it, I'm going to trade it too. like I don't really see all that. But like this stuff over here where it's like we're all gunning for that, strike where we know it can flip it and then we're gonna run it. Like that's like historically that's been stuff that is done, in a particular fund or prop shop or wirehouse taking on other wirehouse. That's not something that people have aggregated themselves together to do. But you've got the chat rooms, you've got the Discord, you've got the different things where people have organized, and they're not necessarily organizing themselves like a group, but just kind of following along with a strategy that then has a derivative impact on the market. I think that continues to play. It can go name to name to name with the options liquidity. And it goes back to like, we've never had this much options volume ever. Options are larger than the securities. So it's like, does this become more of a newer normal type situation where you see these things run and you see them get torched, or you see GameStop came out and said they were like doing NFTs or something like that. They've had so much success because the stocks, they're even reinventing what they even are, right?
That's the
like,
point. That's the point. So there's an underwriting aspect of this as well, like the AMC bondholders. They're obviously made whole with a beautiful coupon. Credit, is just recovering beautifully. The equity is 2-3 times where it should be. I mean, as far as market value, where it was, I said it all pre-COVID and such. But the real danger is there's really no underwriting underneath. There's just pure speculation, and that's at some point going to come on down. But the gamma flippers are mostly short duration, and they're also a confident bunch if they're putting down, like I saw this morning, $1.3 million in premium in $59 AMC calls when it's pricing at 31 with only 2 weeks out.
I mean, I wouldn't trade it, but I mean, they're killing it, right? So
or they're roadkill, or they have a lot of money to blow. I know.
Well, what happens is like you get so I've seen it once, I've seen it 50 times now. Take a $10,000 account, turn it into 50, turn it into 250. You're just sitting there in house money. So you start making decisions you just wouldn't make, on a grinder, like up way, grinding up for years and years and years. You're just not going to take that kind of flyer risk. And these guys are in house money, in their opinion, which I think, you think about it in terms of froth, right? Is this frothy, right? Is this responsible? I don't know. I was talking to like neighbors the other day, and like, these are like people that are doing jobs as like, ER nurses or like things like that. And they're talking about like, I mean, these are normal, like, folks doing industry, like regular industrial work or whatever that commits product and services to the economic ecosystem. And their number one conversation with me was like house flipping and like, going to do this. And everybody's becoming like a kind of a venture person all of a sudden. So I think there's just some innate froth in the entire system. But I think these are not frothy. Like at MVIS, for example. MVIS looked, like a decent setup. And now that's one of the faves. That's a meme fave right there. Like, they love that one.
Touch it.
I know, but like,
No, just say no. I mean, at least get something tangible.
15 points today is 15% up, almost 14. What 14?
I don't know.
So like these are so if you think about it in terms of like, we do have to think about this, and I like to step back and be like, okay, so like just because I've known doesn't mean that it is, and just because I've known doesn't mean that it isn't or won't be. And right, like I don't think that if I look prior to 2017, you can't look at these situations with any kind of historical lens, because you've got to add in those components of the mobile app allowing for the quick interaction, right? Mm-hmm. The communication and social interaction growing, and then just the desire to be involved in the markets. And the kind of Robinhood didn't kick the door down to democratize. They kicked the door down, and now it's extremely participatory.
I'd
right?
like
So
to
it
see
didn't, it
the
did,
I'd like to see the numbers from eToro with their follow the
yeah,
guru. You
yeah.
know, if they lock in to an AMC and optionality just explodes because their followers automatically get locked in, that's a whale. I'd like to see Webull, the Chinese owned, and in fact,
Mm-hmm.
there's several, right? We publicly trade
Futu,
them.
yeah,
Yep.
yep, yep, yep.
Um, so I want to see these numbers as well, just behind the scenes to see what the market structure is really doing. I mean, I've seen Spot Gamma kind of put up some, you know, buy the open kind of premium for retail operation, and it definitely shows a ton of retail, but it's not showing where the shop is coming from. Right here abroad, um, I'd love to get some more granularity to that. Do you know anyone who publishes it? Or have you seen anything on that?
Nah, because like that's like most of this is off exchange, just so they're taking it and it's going to Sigma, or it's going to Citadel, or it's going to one of those structures to execute. That's not ever going to be like, that's not like going through um Amex, right? Or like uh Miami Options Exchange or any of these things. They're not hitting in that context till later. So yeah, I mean, it just is. It's one of those things that you don't see. It's just not real. It's like dark pool data. You don't see it like in real time. I know people want that to feel like they can see that, but the nature of the transaction not being reported in real time it's what it is. So I think that it's going to be hard to get a hold of that like that, unless we get to self-clearing, which is what Robinhood would ideally like to do, which is what the whole DTCC issue
Mm-hmm,
was for them.
mm-hmm.
And they're very bitter about that the investors had to pony up 3.6 billion back in the beginning of the year for the margin call with this whole situation prior. And it was really all based on a float for self-clearing. But that's what they say. We all know that it was because their VAR model was broken. And they
Mm-hmm.
were, well, broken, probably didn't have one. But so when you're looking at, I don't know that, I'm sure somebody will probably do that once that information is actually in real time, right? But right now it's not. As long as the DTCC exists, you're not going to see that kind of information in real time on this side.
The other risk, I have to bring it up because it's again a sentiment check, but I think it matters as it relates to the Bitcoin, you know, hodlers and such. You can see this particular tweet that I grabbed. We've reached the part of the cycle where analysts on TikTok are calling for AMC to reach 100K a share. So you have a lot of macro wonks and maximalists, whatever you call yourself out there, who is incredibly diehard Bitcoin and crypto world champion for lots of different reasons. And I can understand, we've talked about the bullish and the bearish, but the point is now you have meme stocks who are borrowing that, you know, hyper inflated asset price, you know, target of 100K Bitcoin, 100K, right, by end of the year. That's BS. By the end of the year, not very likely, unless, you know, the dollar completely implodes. But the point is this is actually eroding or making fun of and mocking the Bitcoin and Bitcoin proxies and those that have really, you know, bought this whole theme of Bitcoin as the I don't know what you call it, the favorite child here for our next currency paradigm shift. But this is getting stupid as it relates to AMC is going to be the next Apple, and that is obviously seriously, look at that, it's going to be the next Apple. So I'm just saying they're getting a little silly out there, and I think that makes for fun. And but at some point, trading's got to be serious again. Or
It's
does it?
just,
Or
I
does
think,
it?
I think it's dynamically changing in a sense of when you get this many people into something, is a volume thing again. Like anything that gets that many people involved in it, that's got like kind of moving levers, right? So like, we all go buy a product, right? It's a singular product. There's only so much of it can be bought because there's only so much can be made. Well, this isn't like that. This is effectively exponentially, impacting something that's got a ton of different directions it can go. So you get all these new participants into an infinitely dynamic environment with the ability to throw $100 to work, right? Pretty quick. right? And I think that has long-term change impact, right? Like it, dramatically. Doesn't mean that like, I think it's a good thing. I think it's a good thing. I don't think it's a bad thing. Like, because the more people are participatory, the more that there's learning and there's more that's dynamic about it and it'll grow. If there's less people participating, it's more easily controlled and more easily manipulated and really isn't like a participatory environment. So this is participatory. It's definitely a good thing in the long run. It's just there'll be a lot of like wild and crazy things in the interim as this thing shakes out. Cause I mean, we saw these stocks and people like, and so that's why I say long-term holders. I just don't know like the concern. I wouldn't be too concerned about this. And you just saw like these stocks get wiped out 60%, 70%, right? And now they're on a run again, where they go to new highs or they don't go to new highs. They're just on a run again. Like the S&P didn't even blink. It was like, ha, hold my beer, right? I'm going back up, right? Like it didn't even blink. And volatility was like, meh. And you got the share buybacks coming into play, which are going to mute the volatility as a natural mechanism of volatility short, right? Like, any kind of dip, corporate buys. Like it's been produced. That's a pretty accurate thing that impacts the market. So what's the real risk to the downside? I don't, and let this kind of shake itself out. More participation, the better. Yeah, it's like interesting. I heard I was talking to some guys the other day.
But it's also manipulation. There's also a very obvious, I mean, this was kind of interesting to me anyway. You know him, hold on. Matt Levine of Bloomberg did a piece the other day talking about Mudrick, who was issued 8.5 million shares, right? And so the whole kind of concept was stock had a press release. I'm trying to find it here. May 21st. Okay, it was $26 on Friday, up 116% on the week. No particular news, right?
Right.
And then over the weekend, they announced and at a premium that this guy was buying a big chunk of it. What wasn't known, I don't know if you can. I didn't share my screen. Duh. Here you go. What wasn't known is that it was freely tradable. So the news of this sent the shares even higher. They cashed out. And not only did they say we cashed out, but they think AMC is overvalued. So this is the kind of stuff that's also going on.
It's a Wild West, right? Like, I mean, when you've got new stuff, new technology in place, right? And the Securities and Exchange Commission, like you think about like Wells Fargo. Like Wells Fargo everybody's seen the Netflix special on Wells Fargo. Like Wells Fargo has run racket after racket after racket forever, right? Like they're just like roughshod, but they've always had kind of the corner on. Well, now it's like, it's wide open and the participation is a lot different. And, it's wheel and deal on a whole different level with SPACs and, you got IPOs. Robinhood's like pioneering IPO like access and so forth. So it's just basically like, it's just human behavior almost to an extent that just it's transmuted to now a larger pool rather than just being concentrated maybe in the bank environment or the prime dealer environment. And I think that, so you're going to see the same kind of things happen as the Wild West. And as the technology expands it even further, it's very hard for the regulators to catch up with it, right? Because it's just like they're dealing with regulatory entities in my life in the last 15 years. Like most of them are well-intentioned, but it's just very slow because they don't have the budgets and they don't have the bandwidth, the people to go execute like 80-hour weeks. Those people, one, they can't do it because it's against the rules, but two, it's not their, they're trying to just keep it in the middle of the road. So this stuff always gets out in front of the regulators. And so you're kind of running around Wild West here. And I'm not surprised by any of this. I'm just not, I'm not, it's like what transpires. It's you got to be smarter, savvier, and more well-informed. You need more information. You need more access to deep information. You need real-time information because we see it in the space where you got a lot of it's like not even good information just floating around, right? Like, because it's a Wild West. And so having the best information, having it in real time, being able to kind of see through all of that and see what's happening, I think is very helpful because this stuff, it's like defies all logic. Like I can't tell you how many things I've seen. It's just like, every sensibility you would have is just totally defied. And now this thing's going somewhere else.
I don't know. It's saving a whole bunch of bondholders that.
Well, that's helped that helps the Fed, right? Because ultimately bondholders are where the real savings is at, and it's where all the institutional loans are sitting, right? And so corporate debt, and that, you know, is a big piece of the country, and that was really damaged. And that was the scariest part of last year for the Fed. It's the corporate debt.
And you
Right?
mentioned, and I like this. I don't know the exact expression you have said, but Fed won't allow volatility, just rotation because of the
Yes.
pension plans.
Correct.
So this is proving to be very consistent as it relates to we're getting bubble after bubble after bubble, and it's fabulous trading. Are you kidding? I was sitting here Wednesday morning and I'm like, I love Beyond and BlackBerry, maybe Fossil, maybe Tilray. I'm done looking at AMC and GME. I'm sorry, but I'm tired of them. And it doesn't
They're
mean
probably,
that's
yeah,
where I'm
totally.
at. It's just an exhaustion thing. It's not necessarily. I want to go back to stuff that really like has something. Like I know Fossil has some crappy watches and BlackBerry has some crappy phones, but at least they have something.
You don't need anything. GameStop just has some locations that weren't even, that nobody was even going to. They
And
were
you
selling
know,
box video games.
I was a huge recommender of GameStop in June of last year. This puppy was $4 and it was crushed, and there was no way it could go but up with 100% short interest. I was all over that puppy until January. But it's the valuations for me are still very hard to digest, and I understand the fun, I understand the feeding frenzy, but I can't fundamentally promote. There's something that just turns off like an MVIS. I'm like, please. So I don't know what to
You don't
tell
want
you.
to, you don't give it a buy rating?
I don't give it a buy rating. I'm a pass. I'm gonna
Think
pass.
about this. Think about this. I talked to somebody the other day. They were talking about emerging markets, and the fintech got funded massive amounts of money, like 100 million in funding for the loan structure and mechanism via phone app and so forth to, you know, provide the loan structure for buy it now, pay for it later consumer products like furniture and vehicles and all that. You think about the middle class, sizable populations coming online in India, China, Brazil, where these things then go into place, which allow people to have more income, right? That allow them to have more money in their pocket because they're leveraging. You know, you can't get into whether this is right or wrong or anything like that. This is the American structure. This is what we've done. We've been able to, you know, create an environment where you can get a home. You don't have to have cash. You can get a couch. You don't have to have cash. And that creates the middle class. And so that's happening in the largest population epicenters of the world right now. And as that continues to happen, and those people are all young, and they're starting to get into their working years, and the middle class just starts to develop, the wealth of those nations will then get into investing, right? And that's why investing is growing so big in India, and it's growing so big in China, and it's growing so big in Brazil, right? Behind those. But I mean, this thing's just going to get bigger by default, by population.
Well,
right?
okay, so if that's the case, then the Dash for Trash plays are going to stick around because retail loves these low priced or penny stock.
You could see more stuff come into the markets, what I'm thinking, right? And now I'm just, again, we're talking about, I've left any kind of like, you know, talking about options that are today's the most heavily traded, or this is the flow and the money flow. I'm just total conjecture here. I think that you could have more things brought into the market, more securitization. So more securities come into the market because these are just securities. These end up being securities. Like what is Clove Health? Like I saw the whole thing, like the Bloomstrand went off on Chamath this weekend, like with the whole, like, you know, the breakdown of the his performance versus Berkshire or what have you. But at the end of the day, like that's a security that was brought to the market. These things are securities that are being brought to the market in a lot faster capacity, like SoFi, IPOF, is that right? IPOF. It's like these things come to the market so much faster. You get these things that were, going through some rigid infrastructure to get IPO'd, and now it's like reverse merger. Here we go, and y'all can all trade it, right? That's going to happen more, in my opinion, because people want to get a hold of it, right? I saw there's another thing. His kid's got, he's not a kid. He's my age, 30s, and he's sitting there, and they developed a commercial leasing where you can buy fractional shares of commercial products all over the country, like towers and mixed use and things like that, through the phone. It's all been SEC cleared, I believe, FINRA, that type of thing. They're working through all those, but like fractional delivery. So like, I think that this is like the beginning. I price set aside. Are we like getting way ahead of ourselves in price? I mean, aren't we always like, kind of ahead of ourselves to an extent? But I think the bigger thing is like you could see more securities come to the market in the intermediate to long term, like much more securities, and that's gonna give you like a Gresham, like what, I don't know if it's Gresham's law or which law, but like it's the good money finds the good stuff effectively.
I think just liquidity finds anything. They just
right
consumption. They don't have much to buy. They have more money.
Yeah, so like I think you're seeing like you're kind of seeing like a big, this is a technological impact that I think is pretty substantive underneath it all, right? And it just it's kind of defined some of the historical like kind of perspectives in a sense that like, wait, what? Like that meme, right? Like, what? Because it's so like dynamically different from a size perspective that just have so many more participants that cause triggers to happen in the existing system.
Okay, so you want me to have an open
scale.
mind, and it's fascinating because I really kind of like this whole flexibility in thinking is paramount to how I look at market because I'm not intimidated by what I don't know. But it doesn't mean I don't pass judgment sometimes on what seems silly, like the art piece that sold for $18,000, which was actually nothing. So the
fools in their money, right?
So the NFT mockery, it might be something in the future, like the internet was going to be something, but 1999 was a little bit euphoric, right? So the Bitcoin and the blockchain, all of that is going to be transformational, but right now they're just pulling forward so many years of potential growth. It just feels like it's too much too soon. So that's the kind of the farm girl in me that says, okay, I'm just going to use this as a commodity and trade it as such and measure it as such, and I can look and I can see, oh, BlackBerry and beyond, and I can see the energy come into these stocks. No question. That's what I do all the time. Like you have, seen small caps getting the underneath support, and it builds and it builds and it builds, and then it pops up. That's our job, is to see rotation and to try and see themes that are also durable. Right now, oversold momentum has been popping for 2 weeks. Small caps have been stabilizing and now look to break higher. Meme stocks all of a sudden caught the wind, right, mm-hmm. 2 weeks ago, and they are just, blowing strongly. And at some point, they'll probably capsize again and then reset. In the meantime, this is, to me, the fascination that it wasn't just a little bump. In other words, it seemed like folks would get discouraged back in January. Actually, back in August, when we had that huge run up into September 4th, and that single stock gamma option flow was dramatic. We talked about it then. And then it crashed, right? And the NASDAQ lost 14% really quickly. And then, we said they'll be back. The single stock gamma option flow will be back. They got a taste of it. They love this stuff. And it did come back.
It's casino.
It was a casino. And it did come back with fervor, right, mm-hmm. in January. And now it's back again, in May. And it's not as hot and heavy because it was all very exciting, right? And they're not sure some think it's a revolution, but we know it's just market structure.
Market structure. Yeah. Participation.
Yeah. Or the shark frenzy. But how many times will they get? Right now, they haven't they haven't suffered very much, right? I mean,
In
the
the in
big,
the in the absence of volatility, you only have like single stock impact, right? So you don't have broad market volatility and haven't. They just took it out back and shot it. And they shot it in the form of a high yield grade. They shot it in the form of short vol products and the way they were going to go after it and fund that stuff. And in the underlying bid, right? So that the ETF one time frame can take over. As long as you don't have broad market volatility, all things fall together,
and as long as the dollar
right?
is weak and yields are flat, the yield curve has definitely had been flat. It steepened, it got everyone scared, and then it went right sideways, and it's just been sideways. So there's nothing
Right.
in macro land yet. An oil spike, however, can absolutely create FX currency
10th.
volatility. We
Look
have
at
a
the
little
look at
taste
the
of that.
you look at the 10th, June 10th. This is the CPI print, right? Like, and albeit we said that that's delayed, and it's, we've already got inflation everywhere. We all know that, but I'm an advisor, or I'm at a bank, in a wirehouse. I'm at a prop fund. I can't take career risk without CYA, and CPI print could be CYA, right? Where it's like, okay, see, I'm out, right? Because I told you that I was concerned about this, and I can take that risk and I can get off of it, right? And so my positions may change based on something like that. But at the same time, we don't know, right? So that's the only thing in macro land I can tell you that I am thinking, and I'm like trying to figure out kind of the, you've got all the bid. You saw all those meme names and all those. I call them the Wall Street Bets Index. I just created my own index in the app for
Cool.
all of those names, and that those things got hit 60%. That's a lot of IWM because of the ETF structure and the way the market cap's generated based off the
But
size. So
energy
it
and
gets big,
financials
right?
have stayed nicely bid.
And so those that held it, that kind of went down. Those are coming back, and energy and financials are ready to rock too. And we saw Goldman Sachs last week. On Thursday, it was a rocket. It was just crushing, and today, I think, yeah, it's like, unless there's some broad market volatility, you're just going to continue to get like rotation, and what's going to cause broad market volatility right now. I saw some stuff about the dollar earlier today. I don't know, I didn't really dig into it, but
Yeah,
like the
we're getting into an area of support, but it needs to still base down here a few weeks. We definitely
yeah,
have, maybe not this week, but next week, and always into options expiration. There will be potential front running of FOMC, but that's mid June, but that's not supposed to be impactful until
right,
Jackson Hole in August. So really, in macro land, unless currencies start to get very excited, and they would get excited with an oil spike, and we had a strong impulse over the weekend. And what I really like about this is actually the comment that if you think about the ESG movement and Exxon, the board proxies and all the Biden green, initiatives, nothing is going to change Exxon from its planned, 5 or 10 year plan. They're just not going to deviate. They're not. So they're not going to, and then these, big integrated companies and based on combustion engines are not going to change the way that they do business, period. I just I don't see it. And why would they all of a sudden go green? I'm talking about this big ESG movement right when they've got the market where they want to, or a big boom is about to come, their way in the next 3 years. They've taken out lots of competition. I think that it's their oyster. It's their oyster. Which fork will they use? I don't think this is actually a bad thing. I still think energy is going to move higher. So,
agree. I
and it's
agree.
not, and it has nothing to do with demand reopening and that kind of stuff. So they've been patiently waiting. It has definitely been strongly bid underneath. So that to me can create some, strength here in the energy patch that might give currency some volatility, because that's very damaging for emerging markets. And once emerging markets start to panic, that will flow into US. But for right now, yeah, it has been a grind higher. And that the same stuff that I'm monitoring with breadth and cumulative volume, they continue to grind higher. The one thing that I still, track very closely, my stock bond volatility ratio has not triggered. It's just gone sideways. And
Mhm.
the NYSE intermarket that I've shown also repeatedly is one of those that is still extremely extended, but has shown no signs of reversal. And this is the NYSE on a weekly. You can see this was COVID. This was January, by the way, 2018. Got a little extended and came back very quickly. This was also October 2018, where we had that Christmas Eve massacre bottom. Mnuchin called the banks. And then this was COVID. This was January. This was February. 35% drop. So here we have big picture. This is the Midland, right? This is on a weekly. This is all that lovely stimulus, Biden bid, blue wave, Pfizer vaccine. We're way to hell up here. And that's extended. And I have not seen any, indication that overbought is done, except for one itty bitty little divergence, which is MACD, has for the first time since February 2020 went negative. That's it. That's all I got.
Yeah, it's not gonna. I don't think that's gonna do it. The
Well,
market.
if
Yeah.
this had 16666,
Yeah, there you go.
I
Yeah,
might
there you
be
go.
more impressed.
Well,
But
yeah, I mean, look at the extension on
yeah,
that, like the extension, just on that, from a perspective of advancing, like, that's just such an extension. Like
oh
even
yes,
even if you were to get, it's like, is the chase on, right? And so you got a lot of folks left behind, and you got folks, I'd love to get in, put money to work. So that's where I go back to kind of what you said. I don't know, maybe it's 2 weeks ago, 3 weeks ago, something to the fact where you were talking about it, and I agree with you. It's like, you ask me the probabilities of a drawdown, right? Like a correction,
yep.
decent probability to a higher probability, like swoon, lower, crash, like real low,
Well,
right? Like it's just liquidity.
I have levels that I'm waiting to break, but here is the dollar coming into support. We still haven't tagged it, even well, maybe today.
Mhm.
The yuan appreciation. I don't know if you saw that
Yeah, I did
reserve
actually.
ratio of China moved for the first time since I think 2014. But the point is, we're now coming down into this level. But hey, this is the dollar. This happens to be DBC, so think commodities and such. But this took many, many weeks to form a pattern before it moved higher, right? So this is not just a one and done typically, as far as the dollar is
Yeah,
concerned.
yeah.
But definitely, I am looking at that whole structure, which is again NYSE. I show that again because we're still in this channel. Like we're still in this upper channel. This was the 40% VIX surge that we had in 3 days. All we did was go from the top of the channel to the bottom of the channel,
Yeah.
and now we're still up here. At some point, it'll break. At some point, it'll break. Here's the 200, the
And
100.
even in that VIX surge, none
Yep.
of the single stocks went red. They all went neutral on our side. Like didn't even go red from an options market perspective. They went neutral, right? Which is like push at best. So it wasn't even like the VIX surge. That's what it means. Like the VIX surged 40%. You got like a 4% drawdown in the index, 5%. So you could keep seeing those things.
Yeah, it
You
was.
need to see regular breakdowns in that underneath the surface with your stuff, right?
Yep. I haven't seen
Specifically
it.
your stuff, and I haven't seen it either.
Yeah, I mean, we could definitely have this is bearish engulfing, right? The cash
Could
session
yeah, it could
closed.
be. Yeah.
Right, so we're probably going to come back down here to 4180 and retest, and that's important. 4188, I've got that as my level with clients. It's bearish below, otherwise we bounce and keep going. But these meme stocks, what's so interesting for anyone who is kind of new into trading them, put up an option. This happens to be a charting platform that I use, but for example, um, you can see all the option activity, all of it. This isn't sorted by particular month. I can go in there and I can pick which month I want, or I can just watch the flow that comes in. For example, the $59 calls that came in this morning for $1.3 million. Okay, so, and it was printing 31 at the time. So I look at this plus VigTech stuff, which is really, oops, sorry, where is it? It's here, which is really cool because you can not only see the trade tape coming in, you can filter by all kinds of parameters. You can also get a feel for what it looks like relative to others, right, in that kind of bubble. So
Okay.
still AMC has tons of action here coming in. But the point is, I'm just amazed when I look at the single stock option gamma flow that's coming in here. AMC is obviously still elevated and it still has a good chart. This is what is for those who are bearish AMC, it is very, or GME, it's very, very hard to short a stock that is above its 10-week moving average, period, end of point. So this got extended back in January and it pulled back, but you can see how it still has not closed below the 10-week. It tried, and then it moved higher. This was an inside week, and then it exploded higher. You can also see it with, of course, GME. Look at this 10-week. Held, 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 and now it's moving higher. Now it's actually on a daily, it's above a trend line. Now the one, because I was like, ugh, really, I don't want to deal with these two again. That was so dramatic, it was exhausting. So I was looking
GameStop turn into Amazon.
I was looking for something a little bit different on Wednesday, and really, this caught my attention last week because it opened with a gap above. And for anyone who trades technically, that is just gorgeous. Whenever you have a gap lower, it's bearish, a gap higher, it's bullish. You just trade in the direction of that gap. And then, boom. I mean, this is just stunning as it relates to, beyond. So technically, you could also see it coming in with calls, but it was nowhere near that. Now, right now, it's really quiet today, relatively. But on Wednesday, it had, 20, 30, 40, $50,000. So it had tens of thousands of contracts, but it was still less than a GME or an AMC, which were trading, which were trading hundreds of thousands of contracts. That makes sense? So it's kind of fun actually to go there early because then you get positioned for this kind of move. And the same thing with BlackBerry. At the time, this was under 100 IV, and I have a rule of thumb that once the IV starts to come into the 200 range, that puppy is in a squeeze, and you just hold on tight. So that was literally last Wednesday, and this broke above the Bollinger Band. It keeps going. This still looks good. I hate to say it. So that's just kind of for meme stocks, anyone who just is looking at them going, okay, BlackBerry, it did it once, it can do it again. And sure enough, it's been growing where I think GME kind of takes a little pause. What's that, a measly, 22,000 contracts today? So there are there's always rotation, just like you said. Target for AMC, I don't have one because it's already ridiculous. I couldn't even do a fib on this, honestly.
Yeah, there's no. I mean, that it's like GME. Like, I mean, you could go left, keep looking to the left on that. I don't even know what you would look at yearly, monthly. Yeah,
Monthly,
you're kind of like what if you were to look at this old school, right?
it
Like
already tagged and
it
took out the 2015 and the 2017 high. So
so we call that free range. If it gets over 36 to
correct.
38, it could free range, and then it's just going to be supply and demand totally taken over because the resistance is all gone. So, this is pretty. It could fly, and it's kind of people were like, "Hey, how did you call the Bitcoin price between 40 and 30? That it chopped between 40 and 30." Same rules right here that we're looking at is like, you're looking at the most traded levels to your left,
Yep.
and then you're going to be able to back into the volume of those traded levels and kind of see what that's dealing. So only thing I don't have on here is like volume profile where you could see the actual volume of the 36 level, because I don't know if there's heavy volume there from a resistance perspective. If there's not, right? So GME's got BlackBerry, and then
Yep.
there's another, yeah. So like it gets above that level, it can free range. So you just watch your levels, right?
But it is
BlackBerry, here's an interesting one. This is an interesting rule of thumb.
what?
If it trades there, it'll trade there. So you see it spike there, that means there was some demand there. Typically, if it trades there, it'll trade there at some point in the future, low or high, right? So if you look at BlackBerry, that $30 target, somebody be like, oh, 30. it's not really out of the realm of possibilities. Will it get there here? Will it get there now? That I don't. But like, is it out of the realm of possibilities for it to trade there? Absolutely.
Yeah, so
Right.
this is why I like that one better for the same kind of sentiment. And
There you go.
SDNL asked about a lot of this has to do also with the cannabis sector. Will the cannabis sector continue to move strongly? Then this very low priced stock SNDL, which has very large optionality, but again, lots of elevated IV for a $1 stock. This is tough to make money. This is really hard to make money. It's better to just buy the stock. If you're gonna YOLO,
Yeah.
it's
Yeah.
better
You
to
can
buy
buy
the
that
stock.
stock for a buck. Yeah, for sure.
But the
But
pot
you're,
stock space is not really so excited right now. Tilray is one that I am interested in, I will admit,
mhm.
for the same idea as the BB, right? It's kind of got that look that if when it gets above the 10-week, it can really run at
Yep.
least up into this, 100 where it has gotten stuck before. And then if it was to move above this 26 level, then it can take out the high. But for right now, CGC just did earnings and it literally got rejected right at the 10-week as well as the 200-day. So that was today's post earnings disappointment move, and the pot stocks just did not carry through. So,
Yeah.
no, Huya isn't on a, I don't think is on a short squeeze. Oops, sorry. Yeah. But the China plays are absolutely bid up, and I have to mention this one, FXI and EEM before, and you can do KWeb, and then of course drill into the individual stocks. I had noticed, and actually not just for clients, but actually on Twitter, I had noticed on the 24th, very large call spreads came in for FXI. I'm talking like 93,000 contracts. Okay, it was a and it's in here. It was a 45 by 47. I've got to check that again. And EEM, okay, and they put this very large call spread on for 17 cents. It's already up to $1. So somebody came in of size knowing that China was going to be doing well. EEM was the same idea. Check that out. So yes, Huya is another China name. It's not necessarily short squeeze. There's definitely not a tension here. And you can see the IV is still in the 50, 60 area. So that's not in a short squeeze, in my opinion. It could be. It gets back inside the Keltner channel. It definitely can be. But yeah, this was, I thought, very impressive. Somebody knew that China was going to have a really big move, because I will show you real quick. How late is it? Oh my God, it's 5:09 already. Here. So I noticed this China stocks jumped most since July amid record foreign purchases. I caught that on Bloomberg, and I went and looked inside, and the June call spreads for EEM and the June call spreads for FXI were both purchased around 17 cents. One is now, at least this morning I looked, it was up it was now 70 cents, and the other one was already $1. So you can follow whale activity. This is what we do. But I think the meme stocks are they're getting into a place of, like you said, rotation. They're looking for anything that they can, make some very quick percentage moves on.
Expensive to cheap.
Expensive to cheap. Expensive to cheap.
Name of the game.
All right. Well, we'll see what happens in this lovely market for the next week, and then going into options expiration. The heat of summer is coming in, so honestly, AMC was second in option quantity of option buying after SPY for the week.
It's third today, I think. No, fourth.
Okay, so it's losing a little bit of momentum. And the sharks have to keep feeding or else they sink. Just keep that little metaphor in mind when you're trading meme stocks, because that is absolutely, once they smell the blood, they quickly, they smell it from miles around. It's a feeding frenzy, and when it's done, it's done. So careful.
Yeah, and memes more than fangs, right? Right, like, so on
Fangs
a regular basis, the meme stocks NIO today is more than Facebook premium, and size, right?
Yeah, I happen to like
Unbelievable.
yeah, these
Yeah.
have been fabulous plays off the bottom. Now we have to see if they're really going to firm and
Still
actually
no.
create. There's some
IWM's been,
fundamental reasons, at least, for some of these. There's no
yeah,
question.
IWM is like really, I've told you I've been watching that kind of too. I think this print, this for whatever reason it will be or won't be, it'll be important either way. The CPI print action. What happens off of that next Thursday?
Yeah, and it should be elevated still. The inflation moves for April, printed in May, and for May, printed in June, but then it should start to slow down in the summer. That's kind of my contention. And then it gets really spotty towards the end of the year, but they're still expecting really strong, robust growth for next year.
I
So
think
it's gonna,
so.
and also, honestly, all the supply chain backlogs and extra costs and constraints will be resolved come hell or high water for a lot of these chips and a lot of these supplies. But it's gonna mean more upfront investment, and then later it'll smooth out. So I think we have to ride out the second half. It might be a little bit more choppy. But yep, small caps, they've done what you thought. They were going to move higher, and they have now. Let's see if they can get above 230 for IWM. That's a really important level.
If that breaks and comes back and tests and holds, I think that's a great trade. I'll probably take that trade, but I don't know. We'll have to see how it shakes out.
We'll see how it shakes out. In the meantime, have a great week, short week, yay! And
That's right.
yes, and then on I don't think I have it up yet, but bummer, I don't have it up yet. I have Logan coming up on Thursday to talk about real estate, and I think that's really important because he was very, very bullish in January and all of last year, despite forbearance. Now that forbearance is coming off, now that rates have pretty much stayed stable, but housing pricing and input costs have flown higher, he's a little worried about the froth. And so I want to talk to him about demographics, and then, of course, the donut theory, where they're moving out of the centers of cities into suburbs because they're now having reduced work weeks and such. That was one of his themes actually back in January, and that has also proved really strong in the numbers. So I'll be curious to see what he has. Join us Thursday at 4 at the close, and thank you very much. Thank you, Jonathan. Have a great
Thank you, Samantha.
afternoon.
Have a
Bye.
great. Bye, everybody.